Good evening, Facebook. Welcome back to Facebook Live and Eating the Elephant, where we talk about Hurricane Michael recovery. We give insurance information and insurance tips, and then we talk about some general recovery things as well. This week, I want to talk first about sort of my current pet peeve. There's been an alarming number lately of notices on Facebook about abandoned pets, and that's really distressing to me. I realize that's not an insurance issue, but I really hope that if you see a home that maybe hasn't gotten some attention for a while, or if you notice that people have moved out and there are pets hanging around that residence, we have what seems to be an alarming frequency of people just moving out and leaving dogs and cats. And I find that personally appalling. But what I would say is let's be on the extra alert and keep our eyes open, and call the city or the county animal control, call Spay Bay, someone like that, and let's get a handle on it. I realize that an animal shelter is not a great place for an animal to be, but abandoned on the street or in a neighborhood is even worse. It's just not fair to the animals. So I really hope that everybody will take this as kind of a collective communal responsibility, and that we'll keep an eye out for our neighbors and for our neighbors' pets. But let's move on to what we normally talk about, of course, which starts with insurance. And there have been several questions that have come up in the last 2 weeks about fees and how they're collected. There's no way I can get my hands around all of the fee structures here in one 15-minute episode, but I did want to talk about sort of the way things have worked and the way things should work versus the way they can work. I want to caution you at first that there have been some situations where people have signed on, first with the public adjuster generally, and the public adjuster, as we know, tends to get 10%. That's the limit imposed by law after a storm such as this for a year. Normally it's 20%. So most public adjusters are taking 10% of an insured's or homeowner's award. Now, that's typical. We're at the stage now where public adjusters that are not making any movement in a claim sometimes have decided that the best move is to go to litigation. And they may refer you, a PA client, to an attorney. Now, an attorney can get paid a number of ways, but what we have seen is some attorneys have then asked the client to sign a separate fee agreement for another 25 or sometimes 30%. 33 and a third or 1/3 of the award is the maximum. So if we add those numbers together, you add 33 and 10, we're at 43% of the award now, which is certainly possible. And there's some other costs that could be imposed upon you as well. And there could be some engineering fees, inspection fees. There could be some other items that come up in this. And we have seen, we saw a particular client that signed a contract very much like that. And let's say you've got a $200,000 claim, and so you've now signed away 40% of your money. That's $80,000. Now you're down to $120,000 to make that $200,000 repair. Well, let's say you're also one of those people that at the very beginning of the process signed on with an AOB mitigation contractor to go do water mitigation. And let's say they spent $30,000 or $40,000 of that money as well. At that point, you are down to less than half the money that you need to fix your home. So I don't say this to alarm people, and I don't want to sort of play the Debbie Downer card here. What I do want to say is you need to read the contract that you sign, number one. And if you're going to sign on with an attorney, you need to talk about a couple of things. Number one, you need to very carefully review the contract that you're going to sign, and you need to ask an awful lot about the fees. One of the sort of selling points of hiring an attorney is if you go through the litigation process and you get all the way to the end, generally speaking, the attorney, if you win, your attorney's fees are going to be paid by the insurance company. And frankly, most of the time, even win or lose, you can still collect your fees sometimes. It's very complicated when it gets to that. However, what I think you should do is you should talk to your attorney about that and say, look, I'm uncomfortable signing a fee agreement to give you 30% of my money when I'm to understand that, frankly, I'm supposed to get my fees from the insurance company. The insurance company has treated me badly, so badly I've had to hire a public adjuster and an attorney in order to get my money. And I think a judge will award the fees to us as well separately. I need my money to rebuild my home. I can't afford to give you a third of it after giving a public adjuster 10%. So you need to have a very frank, very upfront conversation. There are other fee structures. There are those that work by the hour. Most attorneys, in my experience, that work for an hourly fee require a retainer up front. Might be $2,500, might be $10,000. That seems a little high, but they may require some money up front to sort of get them started. And most attorneys that are doing storm work right now, I've not heard of any that specifically are working on an hourly fee basis. So most of them are either signing contingency agreements or they are simply agreeing to get paid by the insurance company. So have very careful conversations and thoroughly and carefully read the documents that you're given to sign. Those contracts are very important. Just as your public adjuster contract was, just as your construction contract is, and just as the application for your insurance company's policy is. So I'm going to leave that, but again, do choose your own attorney, read your contracts, and before you look at giving away potentially 30% of your claim, if you think that's the only option you have left, it's probably a good idea to go back and consider going to the appraisal process. I've recommended this before. I don't want to review the process, but the fees for something like that, you're probably looking at $1,500 for your average residential appraisal process, and then if there's an umpire involved, you'd have part of his fees as well, which would be $750. So for less than $2,500, you can get all the way through the process, and you can do that in 2, 3, 4 months instead of 2 or 3 years. So that's another good sort of tick mark in favor of the appraisal process. I will say this at this point: if you are not represented at all, if you have not hired a PA, if you have not hired an attorney, it is my opinion that for most cases, I'll grant you every single case is different, I think it's just too late to hire a public adjuster. An attorney or an appraiser is probably the way for you to go. An attorney, if there is some concern about whether something is covered, if there is a genuine dispute over the coverage itself, that's an attorney move, and I would lean more toward the appraiser if there's an acknowledgement of coverage, but it's just the amount you want to talk about. So if you want to talk about whether there's coverage, that's an attorney problem. If you want to hang a number on it and everybody disagrees on that number, that's probably very ripe for appraisal. Finally, I want to talk about sort of moving forward a little bit. And a lot of us are in the position of having to look at renewing our insurance, maybe replacing it with another insurance company, or in the reconstruction process, we now know that things cost an awful lot different than we thought. Pricing is very different. The price of a home is different. And a lot of people, I think, are finding that the logic they used up front to set their coverage A dwelling amount was flawed. It was either a guess, some people threw a dart at a board, some people just took what their agent or insurance provider said they should, their realtor, their mortgage company. Frankly, these are all pretty poor choices. You have some general guidelines, and there's different ways to come at a number. And I'd like to talk about 2 or 3 of them and suggest that you use some sort of hybrid of them all. And if they're all pretty much in agreement and they're all pretty close, then there's one way to handle it. And if you have outliers, there's a different way to handle it. The first thing you can do is your insurance company will have software. It's usually available to an agent, and they can make some suggestions based on what you tell them about your home. So the question becomes then, there's an awful lot of ambiguity in that software. What is the difference between an average and a deluxe kitchen? What is the difference between a basic restroom and an average or a custom restroom? All of these things can change based on the inputs that the agent puts in, and the agent's got to make some guesses at that based on you. So you're making a guess, you're giving that to the agent who is also making a guess, and then he's putting that in a piece of software which is making a guess. And I think we've all got some kind of experience with Xactimate software now, and I think we all agree that the software can be grossly inadequate depending on how it's handled and how it's run by the user. So that's one place to start, is some of the suggested numbers and replacement cost estimators that are provided by your insurer or your insurance agent. As an insurance agent myself, I'm very, very reticent, very reluctant to tell someone what their home is worth, because I don't know. The fact of the matter is, I'm an insurance guy, I'm not a construction guy, and I don't know what it costs to put on a roof, to put down a new floor, to hang drywall. I just don't know. And the fact is, even those of us that did before the storm couldn't tell you what that cost was going to be after the storm because it rose so dramatically, so quickly right after the storm. You can get advice from a contractor. Contractors in normal times, I don't think I'd run around chasing a contractor now because they're very busy, but during normal times, you can talk to the person that built your home, you can talk to a friend that's a contractor, and you can ask them for just kind of a guesstimate. I don't think you need anything formal from them because contractors have been very adept at looking at a structure and taking a pretty solid guess at what it would take to put that structure up. Now, bear in mind that your home may be very unique. If you have a sort of a ranch-style home that's 2,000 square feet with sort of an average interior, it's pretty easy to determine based on a look. A contractor can take a peek and say, well, that's going to cost you $210,000 or so. That's a pretty good estimate there. However, as crazy as that sounds, but they don't know what's inside your home. And let's say you put in a custom built-in wet bar, redid your kitchen. You now have granite countertops where you didn't before. You've put in custom cabinetry. All kinds of things like that can change the value, and that's something you need to account for. You can use some general guidelines with regard to cost per square foot. The problem there is the range is so broad. I'd say the minimum cost per square foot you could see to build a house, not to repair a home, but to build from scratch is probably $125 a square foot minimum. You're going up to $200 or more. If you get west of town where you get custom construction, we've seen a cost per square foot in the $400 or $500 range. So these costs per square foot vary widely, and you're going to want to get some expert input from someone like an appraiser, a realtor, or a contractor to give you some help there. You can, of course, get a full insurance appraisal. That would be something you'd have to pay a fee for. That's probably in the $400 to $500 range, and this is very, very different than the typical real estate appraisal. A real estate appraisal is going to focus on market value, and we don't care what the market value is of a home when it's damaged. What we care about in the insurance world is what will it cost to put it back together the way it was before the storm. So it's a very different kind of appraisal. And real estate appraisers used to include what they called the cost approach in their appraisals as well. But when we had the 06-07 crash, there was an awful lot of question about how things were valued and manipulated, and how lenders and investors, how all of the interplay and all of that was problematic. So appraisers have simply quit doing the cost-based appraisals unless they're specifically given that instruction and paid a fee for exactly that reason. Remember, again, market value does not matter. The mortgage amount on your home does not matter. You may only have a $60,000 mortgage, but if you have a $300,000 home, you need to worry about the $300,000 home. We also see it in the other direction, particularly when we deal with waterfront property. The market value of something might be $1 million, but to rebuild the home that's on that piece of property may cost half that. So we see these kinds of issues all the time. What I'm telling you is, I think for little or no money, you can seek out some guidance and some advice and get evaluation from different sources, consider different inputs. And if those numbers kind of gel and kind of come together, then I would take something on the upper end of the range of those. Let's say you had $120,000, $130,000, and $140,000 value on a home from 3 different sources. Well, I would look at the $140,000 value. I would go to the top of that. The problem is if you have an outlier, if you have $130,000, $140,000, and then $260,000, then you have a problem and you need to reconcile that. Maybe the $260,000 is just completely out of whack, or maybe you've left something out of the other 2 appraisals. What I would say is get some help. Get a lot of advice, ask lots and lots of questions, and make sure that you guess on the high end of the range. And frankly, what I would do is I would add a little bit of padding to it. If somebody gave you a number that you were really confident in of $150,000, let's remember that after a hurricane, values are going to shoot right through the roof and the cost of repair is going to go up. So instead of $150,000, maybe say $175,000 and insure $175,000. This will cost you a little bit more, obviously. The more insurance you buy, the more it's going to cost. But at that point, you can also engage your agent and talk to them about maybe finding a way to moderate that by doing something like selecting a higher deductible, maybe cutting some coverage somewhere else that's less important to you. But as an agent, I would rather see you raise your deductible up very high, say to $2,500, and come out $2,500 short, rather than short yourself on the top end, say from $150,000 to $175,000, and be short $25,000 after a hurricane. That's where I'm concerned these days. A little bit of shortfall in a situation like this is unfortunately something that just happens. That being said, a very small shortfall is something that you can sort of recover from over time. But if you're short $25,000, $50,000, $75,000, that just might be a hole you can't dig your way out of. So include a little wiggle room is the moral to the story there. I'm going to leave it there with one thing. We're going to move this to a once a week sort of broadcast now. And the reason is because all the issues that we've got are just simply coming around in a circle. It's all the same. There's really not a lot of new coming on, certainly not enough for twice a week. And we're also going to morph this thing into something that I've mentioned before called the insurance pilot. What we're going to start doing now is looking forward. We're not going to talk about just hurricane recovery and hurricane issues. We're going to talk about other insurance issues, how to select insurance, how to select a provider, how to tell whether your insurance company that you've got is a good one, how to find a good one, how to evaluate insurance companies, how to save money on your car insurance, what to do about something like a golf cart or a boat, what to do if you have a new roof, talk about inspections and things such as that. So we're going to move forward. I think all of us on this side of the hurricane, it's time to do what we can, even if we're not done with our recovery process. It's time to start looking forward and looking toward next hurricane season, next renewal, and where we go from there. Thanks as always for watching, and we will see you on Sunday.